guys. I'm going to start the call here because I'm in a little bit of a rush situation today. So, good morning, everybody. This is Fred Meissner with the Fred Report. We want to welcome everybody, especially some of our new subscribers in Birmingham, to the Fred Report conference call for September 29th, 2011. We are in a little bit of a rush here in Birmingham, so we're going to get right into it. I apologize in advance if the phone quality is a little less than normal. I'm using a hotel phone. Okay, first of all, we have mentioned in the past couple of letters that we have most of the stuff that we need to see technically to suggest that the market is trying to make a bottom in this area, obviously in the absence of fundamentals, and I understand that the European fundamentals are quite difficult and bad. So, more aggressive players are probably going to want to be buying in here and buying slowly, accumulate slowly as we chop around. This herky-jerky sort of activity is often a bottoming sign, and what we've been looking for. We do not want to see the market go straight up or straight down. Rather, we would like to see the market leap all over the place and frustrate traders and, close somewhere in this area or actually maybe a little lower on Friday. Given that, this is what we want to see. If you are not super aggressive, certainly the spider going through 123, 124 would be an excellent sign that this bottoming formation is in fact a bottoming formation instead of a way station on the way down. So, right now, if you're aggressive, we would be accumulating stocks, especially in the technology area. We remain underweight financials. We just don't see any reason to really try to add those at this time. Obviously, the prices are decent, or at least look decent now, but the relative strength and the relative performance should still lag, whereas stocks like IBM and Oracle that we've had on our lists for a while could do quite well. So let's see how we close out this week, but in the absence of a complete breakdown below, say, 1080 at the end of the week, and anything is possible given this volatility, we don't think that's going to happen. We would like to see the market close out the week in, say, the 1150 area or so, maybe a little lower than here after jumping around a lot. And then we're in October and a little bit more jerking around, and we think we could be where we need to be to see a bottom on this market. Again, obviously, the fundamentals are terrible, but I think everyone's looking at the fundamentals. Obviously, the market sooner or later is going to discount some of these fundamentals, so we have to see how that goes. Let's talk about the bonds for a minute. The TLT has come off the 123 area sharply, something which we've been concerned that was going to happen. We're currently at 117.12 on TLT, and we note that the 115 to 114 area is fairly strong support on TLT. We've been wrong on these bonds for much of the year in that they have been stronger than we thought they would be. At least we have not tried to short the bonds, which is a good thing. But I would say we need to be aware of what we're going to do if bonds start going through 114. They could move all the way back to 102 fairly quickly if that happens. And I know some people have got some fairly good profits in these things. I don't want to see that go away. We still like the looks of the corporate bonds. The LQD looks a little bit better to us. Munis, MUB, which we published a little while ago, is a nice uptrend. We feel that that's where we would be putting some of our bond money for income. We also would note that if the bond market does have trouble, the XLU utilities might also have some trouble. That index has traded extremely well during this market volatility. And again, should something go wrong with XLU and the bonds below 3250 on XLU, they could move back into the 3050 area even as the market goes up. So again, I would say just know what you're going to do if those sorts of things are going to happen, and by all means feel free to email me and ask questions about that if you need to do that. GLD has pulled back into our support area a little bit above it. We were looking right now, we were looking for 153 to 155. They moved to 154 roughly on GLD. We would slowly move back to an equal position in gold, and we are still in a mode where we are avoiding silver. A lot of people want to buy silver because it's cheaper. I would rather buy IAU because it's cheaper. than GLD, but gold is what's going to work here. The good news for the metals markets is gold is working. Gold is leading. The bad news, obviously, is we've hit a period of choppy volatility. Seasonal stuff in all the commodities, and oil looks like it's trying to bottom as well, suggest that you're going to see some choppy action and then some move up in the mid-October timeframe. So it's not like we have to rush in here, but we're still expecting the possibility of fairly decent up moves on these after mid-October into the end of the year, and so we wouldn't want to sort of accumulate here. Obviously, again, using risk management, because, again, if the European fundamentals, which everyone are looking at, do get bad, things could get bad. Speaking of Europe, the euro, the FXE, made it down to 133.50. Our target on the downside was 132. It certainly seems to be hanging on in here. If you are a hedger, it could still be hit and hit that 132 area, but the 133 area may have been it for a while. I would start to buy some euros and such if you are a hedger or whatever. We have a couple of people that are looking to take euro positions for businesses because they're going to Europe. We think that the UUP can get a little bit higher, say to 23 to 23.50 from a high of 22.25, but obviously if the euro is going to go, the dollar's not going to go, and a break of 21.75 on UUP would be a matter of concern for us, and say that maybe the dollar is going to start to languish and the euro work again. I think the big trade in these currencies may be that not a whole lot happens into the end of the year, that they suddenly stabilize and not a lot goes on. So we'll have to see how that goes.